Hey, hello, and welcome everybody. We are back this week for the Nurse Your Wealth podcast with me, Jason Hamilton, and my good friend Naseema McElroy, the woman who paid off over $1 million in debt in 3 years. If you don't know me, I'm a certified financial planner, and I work with clients all over the spectrum from 20 years old to 70 years old to help people get their finances in order and create a plan so that they can do whatever they want to do in life, whether that's retire early, whether that's start their own business, whatever it takes. We're here to help you out with your finances. And today we are going to talk about, I think, a really good question and maybe a big myth when it comes to how some nurses think. And when it comes to that overtime and, all those extra hours you want to stay and to see that wonderful overtime hourly wage or the double time hourly wage, but then somehow you think it all just disappears and go to taxes, which it might be partially the case, but there's a big question where people say, why should I work more when just everything seems like it's just going to go to taxes? So we're going to talk about today, we're going to destroy some of the myths, and we're going to talk to you about what that really means when you are working overtime, putting those extra dollars in your pocket so that you know how to handle those, that you can keep more of that dollar. So what do you think, Naseema? How should we be looking at this today for our nurses?
I think your job is also your ultimate side hustle. And I always find that nurses are always trying to find ways to work extra money. And so they get hounded by a lot of MLMs or network marketing companies. And I really want people to understand that your primary income source is usually the best way to generate extra income. And working extra shifts is one of them. But what I hear all too often is that, why would I work extra if it's all going to taxes? And I can tell you the things that I do in order to avoid them going to taxes. And I think this is especially timely because as we're recording this, we're going into the holiday season, or we already had Thanksgiving, but we have Christmas holiday, which also, that's overtime pay. And then we have New Year's holiday, which is overtime pay. And so some of the things that I have done is when I know I'm getting these extra checks, I make sure that I am maxing out my 403B. And because I work at a hospital that's kind of categorized as a government entity, I also have access to deferred compensation. And so that's a 457 account. And that's where I throw all of my extra money. And so also, there's ways that, and this is something that you should speak more on, but there's ways to adjust your taxes. And, most HR systems are online and you can go in there and adjust your withholdings and stuff pretty readily. But those are some tools and techniques that I have been able to employ, and so that I am paying myself by working extra. And this is how, if I have a goal that I need to reach, that's how I've been able to do that.
Okay, so let's take a step back because you just laid so much out right there. I want to break some of that down. So let's start with the myth, first of all. Let's start with our first question. If you work overtime, does it mean that all of that overtime money is going to go to taxes? I think sometimes we see our checks really get cut. But what I want to talk about first is how the tax system actually works here in the U.S. Yeah. So people can understand that, because I think there is a misunderstanding with how things work. And then we'll kind of break down to some of the strategies that you mentioned, which I think are great strategies. Right. But I want to make sure we're taking people along here really step by step on how to think about this the right way. Because I think the mindset aspect is number one. And then two, once we get the mindset right, then we can talk about tactics. Is that okay?
That sounds perfect.
Okay, cool. So in the U.S. here, we have what's called a progressive tax system, okay? And so what does that mean? It means that on lower parts of your income, you pay less taxes, and then as your income increases, you're going to pay a larger percent of taxes on that money as it goes up. So let me pull up my cheat sheet here. Sorry, I had to step off screen. Let me pull up my cheat sheet here to talk about, I'm going to talk about 2019 because I don't have 2020 in front of me. We can talk about 2020 in the future. But if you are a single filer, okay, first of all, I want to let everybody know and remind you that you now, with the new tax plan, have a large standard deduction, okay? So it's about $12,200, and that's going to be 2019, that each you, and if you're married, your spouse, gets to deduct off of any income that you make. So essentially, you can make the first $12,200 and not pay any tax on any of that money, okay? So that's what people forget sometimes, is there is some income we pay no tax. And then if you are a single filer, the next $9,700, then you're going to pay 10% tax on that money. Okay. And then if you're a joint filer, like if you're married, it's going to be $19,400. So you don't pay your top tax rate on all of your money. You're going to start at 0, and then you're going to go to 10, and then you have the 12% bracket. The 12% bracket for single filers is from $9,700 to $39,475. And for joint filers, it's $19,400 to $78,950. So these are all going up a little bit for 2020, but we're still in 2019, so I think it applies here. And so you're not going to pay any more than 12% on your money until you get past that mark. So a lot of nurses that we speak with have these really high incomes, so you're probably going to be up in these next tax brackets, which is now where it's going to get really interesting to talk about, which you talked about with the deferred comp and like 403Bs or 401Ks. So once you get past $39,475 for a single filer, then you have up to $84,200 at the 22% bracket for a single filer, and then up to $160,000, $725 for the 24% bracket. So once you get past $160,000, then you're in 32 as a single filer. The joint filers go from that 12% at $78,950, then from $78,950 to $168,400 is 22, and then if you're married, $168,400 to $321,450 is your 24% bracket. So we have a range, right? So we start at 0, then we go 10, 12, 22, 24, okay? These brackets are set to sunset in 2025 because that's what the current tax plan has laid out. We couldn't get a permanent decrease. So in 2025, they may be going back unless something, changes to extend that. But when you work overtime, it's a little bit interesting when you're receiving a paycheck. If you're self-employed, like myself, we essentially pay our taxes quarterly. And so if we have a big month and then a slower month, it all averages out. We just pay our quarterlies that way. But what I've seen with W-2 workers is if you have a huge paycheck in that particular month or pay period or whatnot, your payroll company is going to make it seem like you actually make that amount of money every month for the whole year, right? And so what they're trying to do is make sure you set aside enough money so that you don't end up with a massive tax bill at the end of the year. But in reality, they're probably overtaxing you. And at the end of the day, you are going to get any money back you paid over in taxes in April or whenever you decide to file. But in that month, in this holiday season, when you're getting this overtime and this double time and working all these extra hours, it can really seem like it's all for nothing because you may be seeing 40 or 50% of that money be gone, essentially, right, to taxes. So hopefully that makes sense. Is that clear, Naseema, before I kind of move on to? Okay.
Very, yeah.
Okay. So, when you are, having those big paychecks, and I know nurses that when you start getting double time, you're at $80, $100+ an hour sometimes, right? I've seen that multiple times. That, it seems like a huge chunk of money in your paycheck. But then when you receive it, it's like, well, it might only be 30 or 40% of what you expected to see. Yeah. So how do we keep more of that money, right? How do we keep more of that money? And I think, Naseema, you brought up a good point, is the first place to start is what are your goals for that extra income, right? Is this money that you want to take home and use, right? So if you're working for Thanksgiving, Christmas, and you get the extra time, are you trying to do this so you have a bigger paycheck to buy more gifts? Or are you trying to do this because you have room left in your retirement accounts, like your 403Bs, 401Ks, or 457s that you might have if you're working in a nonprofit hospital or government type hospital? And that's where it can get really interesting and a great way to keep more money if you've done good planning ahead of time. Yeah. Right? So in most nurses, Naseema, do most nurses that you've seen have multiple types of accounts, like the 403B and a 457, or would you say that's more rare?
It's less common.
Okay. Yeah, I don't see it too often. I see a lot of 403Bs, and then nurses will also have a pension option, and then sometimes they'll have some sort of deferred compensation option. But there's kind of a variability. But for sure, most people have at least a 403B or 401K. Is that fair to say?
That is correct.
Okay. So what I think a lot of young people are not really may not be understanding is the power of compound interest, right? So compound interest, essentially what that means is when you put money into your 403B, generally you're going to put it into some investments. And then, ideally, and on average, if you just keep your money in there, you don't move it around, you should be earning some interest on that money. And when you earn money, let's say you earn money in 2019, and this year you could have had a 15 to 20+% return if you had your money in the market. And let's say you finished your 20% return, and let's say you started with $100,000. So if you have $100,000 January 1, at the end of the year, if you didn't put anything in, you'd have $120,000, just to keep the math really easy, and even though you probably did put something in. Well, if in 2020 we have a 10% return and the market doesn't go down, you're not only going to get 10% on the original $100,000 that you made, you're going to get 10% on the $20,000 you made from the year prior, right? So compound interest is where you earn interest on your interest, right? And a lot of young people don't really understand the power of what compound interest can do for you over long periods of time. Warren Buffett called it I think the eighth wonder of the world, because it is just really, really amazing. And so if you're a young nurse and maybe you're not married yet, you don't have children yet, and you have all the time in the world to work these extra hours, by doing what Naseema mentioned and putting money into your 403b or 401k, if you put that money in pre-tax, you will actually keep all of those dollars today because you're not going to pay tax on them today.
Right.
You will pay tax when they come out, but today you won't have to be paying anything. So I think that would be strategy number one, is if you're trying to save more for retirement, let's max out your 401k or your 403b, which for nurses under 50 is going to be $19,000 maximum for 2019 and $19,500 2020. And if you're 50 or over, it's going to be $25,000 for 2019 and $25,500 for 2020. Anything you'd like to add to that, Naseema?
No, thanks for reminding me that it's going up $500.
Yes.
I have to do some adjusting around that. Thank you, though.
Yes. Yeah. So that's something you don't want to forget. If if you have your contribution set to max out every year, definitely you want to look at that before the year starts, so that you can get that extra space available of the $19,500 if you are saving that heavily, right, for retirement. What do you think is a misconception with nurses in general when they're working this overtime and they look at their taxes and they don't quite have an understanding? What do you think are some of the big things that we can help them understand when they look at their check and not sure how to really think about it?
So I love the way that you broke that down. I think a lot of people look at their check and they just see the tremendous amount that they're paying in taxes, and they just automatically assume that all their money is going to taxes. I mean, I know that's how a lot of nurses feel, especially, California, our state taxes are high as well. Also, this might be an additional question that we should address later, but a lot of people are scared. So it's two ways. A lot of nurses play around with their withholding so that they don't pay any taxes, so they can take home money, and they're usually not doing anything good with it. They do that, like they're not like using it to invest in something. They're usually using it to fund their lifestyle, which is inflated. And the other thing is that they're withholding like everything because they're scared of paying the government. And that was probably the tangent that I'll tell you we can probably go on, is that, people aren't sure what taxes is, like in a tax return and all those kind of things, and how withholdings work, and how you should really be working with someone to adjust your withholdings to meet whatever your financial goal is. And so, yeah, that's a lot.
Okay. Yeah, no, that's great though. Yeah. Let's dig into that a little bit. And you did mention the Medicare surcharge, and that is absolutely painful for our high earners, because that's just money you never get back. So what people may or may not know is for Social Security tax, which is 6.2%, there is a limit. I think it's $128,400. Let me just look at my cheat sheet here, something like that. I memorize what I can memorize, but sometimes I got to use my cheat sheets here. So I'm sorry. It was $128,400 for 2018. It's $132,900 for 2019. So what's that? Sorry. $132,900 for 2019. So what that means is you're going to pay Social Security tax, which is 6.2%, on the first $132,900 in 2019. But then after 132, that 6.2% stops getting charged. But we have a Medicare charge, which is 1.45%, and there's no limit on that currently. Okay. Yeah. And then if you're a high earner, then you have a surcharge. Okay. You have a surcharge on that, which is if you earn over $200,000, if you're single, or excuse me, if you file taxes single or head of household, it's over $200,000. And if you're married filing jointly, it's going to be $250,000. You're going to pay an additional 3.8% over that portion. So this is where I see, if you don't earn $250,000, but I have seen a lot of nurses that earn that much, and they're just paying that all year, which is absolutely painful. But if you have that massive paycheck, for example, which makes it look like, as I mentioned, that if you made that amount of money all year, you may be getting charged that extra surcharge, even though that's not going to end up that way at the end of the year. So these are things that, I think nurses really should be looking at throughout the year. And in all honesty, taxes don't make sense to a lot of people. They confuse me still. I use a CPA, right? I understand tax and tax planning, but I still use a CPA to partner with to help me do my projections throughout the year, because my income is highly variable, and I want to make sure I'm staying on track and not end up with a big tax bill. So you had a good point there, is talking about withholdings, right? And so when you look at the IRS withholdings table, it's not a perfect science, okay? So it'll have, how many withholdings do you want? 0, 1, 2, 3, 4, and what most people think is however many people they're going to claim on their taxes, that's what they should use. So if you have 4 people in your household, you should claim 4. If you have 1 person in your household, you should claim 1 or 0. And that's just really not very accurate. It's sort of a guideline, but it's not really. And what happened with the new tax plan, when it was passed, a lot of people thought with this new, I guess you can call it the Trump tax plan, but people thought their taxes went up, right? But in reality, for the majority of people, not all people, but the majority of people, taxes actually went down. But because the IRS withholdings tables did adjust, and then people did not make the proper adjustments on their withholdings on their W-4s at work, or W-4, then they ended up actually taking home more money throughout the year, but then that set them up for a tax bill when tax time came, right? So by spending time, if you are a high earner or you have a big tax bill in the past, it makes a lot of sense to pay your CPA a few $100, a year, and have them check in on your pay stubs quarterly, or a financial advisor. I do this for clients as well. Or a financial advisor, just to look at your paycheck, at least once a quarter, so that if it looks like you're going to be underpaying, at least you either know, and you can set money aside. And if you're overpaying, then you can reduce down those, increase those withholdings, I should say, so that you can take more home. Again, it's not perfect. It's a tricky type of thing. But, in our original conversation, Naseema, you told me that there's a lot of nurses out there with tax debt, with IRS debt, because they didn't do this properly. And that really shocked me. And that's what inspired me, really. That was the key thing that said, we need to do this for nurses. Because, again, I have family members that are nurses, and that really hurts me to see that people are doing something amazing and then they're ending up in a stressful situation because they didn't plan properly. How common is that? Can you tell me about what you've seen with people not paying, their taxes properly, and then types of trouble they've been in?
Oh, I see it pretty often with my colleagues, but also people who reach out to me get in trouble a lot in taxes just because they the failure to plan. All the time, like more often than not, somebody has been struggling with IRS issues and trying to deal with that just because of not withholding properly. Can you mention again the people that who people should consult in regards to getting help with withholdings? Okay,
so the simple one is whoever files your taxes, right? So if you work with a tax professional, if you have a CPA, that type of thing, most people probably get their taxes filed at one of those local places,
Please don't.
And it can be okay, but, in all honesty, that's pretty, I've seen a lot of problems with those type of places. I've experienced those problems personally because someone wrote off, 2 things that they weren't supposed to. It's either one or the other, and I had to pay back taxes 4 years later. So now I work with a full-on CPA. But, if you work with a good financial advisor that does specialize in tax planning, then that could be another place to go. I could do a whole segment here on financial advisors on who you should work with and who you shouldn't. But simple breakdown is, remember these things when you're looking for a financial advisor, if you want to have the best chance of success of getting a good one, is fee only, right? So no commissions, right? No commissions, no insurance salespeople, fee only, because insurance people can't do tax planning anyways. That's not really something that's really allowed. You don't want to work with brokers. They don't really do tax planning either. But if you have a fee only certified financial planner, okay, so CFP, and you want to get one that specializes in tax planning, which again, it's a little bit rare to find that, but those are the questions you want to ask. Say, are you fee only? Are you a certified financial planner? And do you have a specialty in taxes and tax planning? If you say yes to those things, then you have a good chance, right? It's not a perfect science, but that's a good chance. But you can work with a CFP. You can work with a CPA, which is Certified Public Accountant. You can work with an EA, which is an enrolled agent. An enrolled agent is basically like one level below a CPA, but CPAs are more kind of business taxes, and EAs are still very advanced, and they can sit with you in front of the IRS to defend any sort of audit, but they don't really do too much business. They're more on the personal, but some business there.
Right.
But those three of the designations I would really be looking for, when it comes to finding somebody to help you out.
I've never even heard of an EA, so I'm learning all this game.
Yeah, I'm studying for mine right now. It's just I'm doing it in the evenings as I'm finishing everything else up.
Wow.
It's good stuff, but it's very technical. So that's why I feel if you have someone as an EA behind your name, you're probably gonna be in good shape when it comes to getting tax advice there.
Nice.
Yeah. So when you hear nurses that are ending up in tax debt or in IRS debt, like what do you think's going through their mind, or what are some of the things you've heard people say or stories that they told themselves about how they're handling it?
It's pretty sad because usually they don't handle it, and so it gets to a point where they're suffering garnishments, and that's another thing that I like to address, like as far as like fear, like IRS. The IRS is scary. Okay, they're scary to me too.
To me too.
But there's there's a lot of fear around it, and instead of like addressing it, they're ignoring it, or they always like go to like these. I don't want to say scammy, but these people that say, "Oh, we'll help you fix your debt, your pay off your IRS debt," and they're not the most legit companies. And so these are the things that people are doing instead of being proactive and kind of taking control of their finances. And so it's pretty scary.
Yeah. So you mentioned a couple things there that are interesting. So. Financial matters are one of the things like people. Okay, so the biggest fears people have in life are pretty much dying and public speaking, right? And but when you look at some research studies, it says that people would rather do public speaking than talk about their finances with somebody else, right? Finances are very personal. It's a very scary subject for a lot of people. It's an embarrassing subject for a lot of people. The words I've heard used before is I carry shame, because I'm embarrassed of my situation, because maybe I have, credit card debts or, some sort of, I'm not saving enough money. I have IRS debt, or a ton of student loan debt. I mean, all these things that people are really fearful of. And, when I spent about 3 years before I transitioned into this field, just studying the Certified Financial Planner curriculum. And there's a lot of technical knowledge about everything about investing, estate planning, taxes, blah, blah, blah. But there really wasn't a whole lot of subject material around psychology and what you have to deal with when you help people with finances to really help them kind of break free of that and move forward. So I didn't realize I was going to have to get a psychology degree with my financial background.
Right.
But what I've come to find is that when people can take that first step, and reach out and get some help from somebody who knows what they're talking about with their finances, it really does change so many areas of your life, because I've seen bad finances cause marriage problems. It's caused people to be sick. They're just always getting sick and they don't know why, and it really is just a financial stress. They've had things where they've fallen into depression. There's been cases of suicide when it comes to things like extreme levels in the entrepreneurship community in Silicon Valley, where people people invest in millions of dollars in their startup and then it ends up failing. They commit suicide. So there's a lot of really of the underbelly of the U.S. that there's plenty of success stories, but there's also a lot of stories where people just feel really embarrassed, have shame and fear around their finances. So, the first thing to do is to get through that fear and reach out to somebody to talk to them to get your initial start. And obviously that's what we do, but I'm going to drop a name of an organization that I think is doing good things, and they're nationwide because obviously, maybe some people want to go to somewhere local. And there's a place called Operation Hope that really does focus on credit. Have you heard of them before? Yeah, they, have you worked with them before or just heard of them?
I actually went to Operation Hope. They have other classes too, like starting a business class. And so I've actually just been a student there. So it's a good organization. Yeah.
Yeah. So we work with them through the nonprofit work I do, and they do a lot of things in the community. But, when you brought up these whole, settle your IRS debt type companies or fix your credit type companies, the majority of that stuff you can do by spending an hour doing Google and YouTube searches, right?
Yeah.
I really don't think they do a lot of things that you can't do on your own. And what I've seen more often than not is they're going to put you in a worse situation first before they make it better. And a lot of places, if they start telling you to let all your payments go so then you can settle them, that's really not the right way to do it. And so these are things that I think there's so much to address. We have a lot of things to talk about. We can spend a whole episode on that. But if you are facing IRS debt, what you don't want to do, if possible, is let it go to garnishment, because it becomes so difficult to get out of there. The IRS will set you up on a payment plan that is reasonable. And, actually, you could probably pay a way smaller percentage of what you need to pay each month. But at least you are on a positive track. You're not getting your paychecks garnished. And, probably I think it's up to 25% they can take, which is completely out of your control. And so you want to avoid that if at all possible. And if you're getting close to that right now, reach out, send one of us an email, reach out to Operation Hope, somebody to get some help, because you do not want to let it go that far. And if you're already getting there at this time of year and you're going to be facing it in 2020 when you go file, and it's really time to get some help on that. But I think we'll spend a whole episode on maybe credit, on how to handle that, because we're already, almost 30 minutes in here. But from what you've seen nurses doing, what are they currently doing that you've seen that maybe may not be the right thing on how to handle this?
Like I said, they're just operating from a place of fear, and they're just not addressing it. They're just ignoring it, kind of just like they ignore the rest of their finances, then just continuously getting in trouble, but also just not knowing who to reach out to. And so that's how these people kind of get in, these predatory kind of people that aren't necessarily working for your best good. And I think that's another issue, like we talked about, like the whole life insurance thing. That's another way people get into people that are less financially educated space, is like they sell these credit repairs, these tax repair kind of things, and they fall victim to that. And so it's pretty sad, but that's what I see.
Should we shift gears and piss off some people and talk about whole life insurance and how we see it as a huge scam in the low income communities and specific communities in general, or should we save that for another day?
We should save that for another day, because I feel like that deserves its own conversation, because I'm pretty, it pisses me off a lot, and I have a lot to say around that, and I'm sure we'll probably get some good feedback around that. So let's save that for another episode.
Okay. So if you guys are watching here and you're enjoying what we're talking about, please, we love to hear your feedback. Leave us a comment below. We want to dig into some of the biggest issues that really I don't see a lot of people talking about. We have our own biases, right? Because we both came from different places. But I think if you come from a low income background, a lot of people think it's just them, right? And we're probably going to talk about some things that are like, I don't know, may upset some people, but I want to talk about how things don't really have to do with skin color, but they have to do with where you came from and the mentality of the people around you. Because, I think when you come from a low income background, it's a whole different mindset than if you come from a more moderate or high income background. And I've seen people, it doesn't matter their skin color, in those situations and either the right behaviors or wrong behaviors. And it really has nothing to do with what they look like, but it does have to do with how they think. And how they think is impacted by who's around you. You may spend time around a certain community, but I really want to break some of these, I don't know, I'll call them lies or fibs or, misconceptions that people have that they think it might be just them, because I work in all different communities. I have Black clients, I have Latino clients, I have Asian clients, I have Middle Eastern clients, and I have white clients. And so I've seen, a lot of things that really are not that different. And in all honesty, the people that seem to be the best with money are people that weren't even born here, by the way. People that were immigrants that came here, regardless of where they came from, they seem to be a whole lot better than Americans. And when, doesn't matter what you, again, look like, once you get to the third generation here, that's when the American mindset starts to set in. And consumerism, overspending, lack of planning, and, complaining about whatever it may be really comes into people's families. So I don't know, I think it's going to be interesting. People are going to send us some hate mail, but that's okay. We need to be real. And if we can't be honest and get to the truth, then we're never going to be able to move past that and get to fixing people's current situations. And that's really how I see things.
Yes. Concur.
So we're hitting about 30 minutes here. What do you think we should wrap up on for today when it comes to this particular subject of our big question today of should I not work more because of taxes, or, what do you think we should touch on here?
I think ultimately the bottom line is it's not really about working more. It's not really about paying taxes. It's really just understanding your financial situation and what your goals are, and just knowing what resources you have available to you that you should have in your back pocket as your team in order to make sure that you're meeting your financial goals.
Yeah. So, the things we should be learning some things in school, right? We learn about parallelograms and Jupyter. But we don't learn about filing our taxes. We don't learn about changing the oil on our car. We don't learn about doing a household budget to make sure we don't end up in a bunch of debt. We don't learn about any of these things. So we want to bring you the real education here on what the life skills that you need from a financial perspective to succeed. So today, the myth we wanted to bust was if you work overtime, then all that money is going to go to taxes. And the reality is that it won't. But if you know you're going to have a huge month the following month, you may want to change some things, either like increasing your 403b contribution, 401k contribution, or changing the withholdings on your W-4. I want to say W-4, W-9. I always get those two confused.
W-4, you're right.
Yeah, on your W-4, so that you can take home more money that month and then just change it the following month if your HR allows those type of things, so that you can keep more money today versus letting the IRS borrow it until they give it back to you at tax time. You are not going to be paying extra. Your taxes are based on a marginal system where the more you earn, the more you pay. So it may seem like a lot today, but those two tactics of either adjusting your withholdings or putting more money, increasing the percentage that goes in your 403b or 401k are two great ways to keep more of that holiday extra earnings or that overtime earnings you may be earning at this time of year, so that you keep it from the IRS, which again, I don't have a problem with the IRS. We ought to pay our taxes. We have a lot of opportunities here in this country, but I don't want anybody to pay $1 more than necessary, right? We want to keep everything.
I'm not trying to give the government an interest-free loan.
Thank you. Yes, exactly. So I think we can wrap on that for today. And if this is your first time here, welcome. Thank you so much for tuning in. Our plan is to be here every Monday at 10 a.m. Pacific time, which would be 1 p.m. Eastern time. And of course, you can watch this later. And then we are working on a podcast in the background. We'll get that out shortly and let you guys know about that. But please, if you want to be notified about our current lives and you want to talk about things in the nursing field, the financial field, make sure to like and make sure you turn on notifications for our pages so that you get notified when these come up. And we would love to have you here. And if you have any questions, comments, or thoughts about what we had talked about today, leave them down in our comment section and we'll be happy to address those as soon as we possibly can. Anything else you want to leave us on today, Seema?
No, thanks for joining us. And remember to tune in live every Monday at 10.
All righty. We appreciate you guys. Have a great week. Let's start this week strong. Let's finish the year strong. Earn that extra money, but keep it. Put it in your 401k. Put it in your 403b. Max out that $19,000 or $25,000, depending on how old you are. Keep that money so you don't give away an interest-free loan. Increase those percentages today, and do everything you can to keep the government's hands off of it. And until then, we will see you next week. Have a good one. Bye-bye now.